Well, I think I must have drew the wrong straw that I wasn't the first person today out of the group, but that's okay. I hope everyone is ready for the day and got some coffee. I know sometimes mornings can be tough, so we'll try to get through together. So today, I want to first start out with having a quick picture for you guys to see. And I'm sure some of you out there are some Marvel fans, and this is a great scene from the movie where Doctor Strange does have to try to find the best path, the best version of what he needs to fix a problem. And to be honest, it'd be nice to have a time stone. I think sometimes is when you're doing something or you're fixing something, you never know for sure exactly what it's going to do. Is it going to fix the right thing? That's one thing that would be great to be able to have as an item of your possession. But unfortunately, we don't have that in real life. So, but today maybe we can still have you be able to still learn how to think ahead a little bit before doing, let's say, a corrective entry, for example. There might be many different versions of what you can do and what the outcome is going to be. So maybe think about what have you done some of those in the past? Did you feel kind of like Doctor Strange when you're trying to figure out where to go next? And hopefully that gives you a better idea of where to go for the future. Okay. So I'm going to start off with just what is a corrective entry? So a corrective entry is a journal entry that is made in order to fix an erroneous transaction that previously been recorded in our financial statements. And also in a lot of cases, it's also going to be your general ledger as well. So a mistake was made. Now what do you do? Throughout the year, there's going to be times that you're going to make mistakes, and that's okay. Everyone does. Don't feel bad if something did happen and you have to maybe go tell somebody. I think like what I'm thinking, if I'm in some of your shoes out there, tell people who are around you. Other staff members that are in your office. You might have to figure out what to do next. And sometimes your coworkers are the best people to talk to. And also sometimes the board members might have to be known, to be let known what happened, and maybe they need to address something with you. And maybe if it's a bigger one, they have to help. Also, the third group of people you might be able to talk to is your auditors. And I'm biased on this one, but it's always great to talk to your auditor about these kind of things. It's always nice to have a heads up, when auditors come places where something has happened. So, please feel free to tell this group of people as well. Also follow the protocol. If you have a policy for this type of thing, make sure that's followed. And we'll talk about that a little bit later, but it's always nice to have a process, what you can do next to further, that situation. So I'll go into some examples of corrective entries. Revenues, expenses for coding. So after thinking about, since I've been here, there's a lot of different times that people have done like revenues that maybe didn't get to the right code that was supposed to. And expenditures the same way, maybe went to a wrong fund. There might be times that you may not find that until later in the year, and you'll have to correct that at some point. Hopefully before your audit happens, because then sometimes the auditors will catch that too, and that's a whole year past, usually or more, when you have to go back and correct something. So that's just a couple examples of that. Could be, let's say you got a revenue from a certain agency in the state, and it's supposed to go in the general fund, or it's supposed to go in the highway tax fund, or something like that. You might have put it in the wrong fund. You might need to do an entry to correct that, so it's in the correct category. Another popular one that we've seen is capital assets. Adds, deletes, construction in progress. I'd say for the majority of the ones that I've been involved with, would be these three categories. Ads, you might have given an addition list for capital assets that maybe one was forgotten, or maybe in the previous year, that list was not correct either, and someone caught it the year after. Those are going to be, for additions, that's going to be a corrective entry for your financial statements with your auditors. Deletes, so if you have a list of deletions, you may have forgotten one, or from the previous year, there was supposed to be one deleted, but didn't, and now you have to fix it going forward. Construction in progress, that's a popular one for all the big projects that are going on. You might have had some beginning fees or some costs that you may have forgotten from the previous year. And when your auditor comes, they ask you about the project, you might have additional costs that weren't included in your addition. So might have to have an adjustment for that. Long-term debt. So this is one where I think it can happen where, let's say you issue a special assessment for a city or another type of local government, you might not give that list to the auditor, or you forgot one, but the auditor did see that payments were made, or something like that. You might have where the issuance has to be adjusted to put back in the financial statements. Your auditor will most likely walk you through what that's going to look like, but just be aware that that's a common thing, that either a bond or loan or specials that you have forgotten will get caught at some point. Accounts receivable and payable, that can be a common one that we've seen where it's going to give you, you might have a list that you were given to someone for your auditor, and they might have caught where one didn't exist, or from the previous year, it was supposed to be there, but wasn't. Either way, there might be a corrective entry of some sort that your auditor has to walk you through, or if you find it ahead of time, you might just tell the auditor about it, at a later time, and that's okay too. Bank reconciliations. So this is a very good topic that we have caught over the many years, and this is one where it's very important to have a balancing bank reconciliation. You may come into your organization as a new person where it is not balanced, and it's been maybe months since someone has balanced it. There might have to be a corrective entry to put that back in the right, get you back on in the right category, in the right line for the future. You always want to have balancing bank reconciliations, so you might have to do that as well. Transfers, that's going to be a one thing you can do to make sure you don't have a problem with transfers is, did your transfers ins and outs balance throughout the year? We have seen where a transfer in was there and then a transfer out was not. Maybe it went to an expenditure line item instead. You might have to do a corrective entry to get that transfer back in so they balance. So corrective entry policy, I just wanted to kind of give some examples of what one could look like, and we could talk through it a little bit. And if you have any other questions about it, please reach out to me afterwards. But this is one where I think it's important to be able to have some kind of procedure or policy in place when they happen. So when you do happen to have a mistake or error, you should assess it. What went wrong? What is needed to fix it? And what is the amount of the mistake or error, so people know what that is. Sometimes the small errors can be treated differently than large errors, and that's going to be up to management, of course, but that's something that you have to decide. Like for small ones, can staff just fix it? And maybe just a listing gets sent in. Maybe some larger ones, you might have to go through a formal process where people have to approve it, and they have to go through the general ledger, all the way through, and then keep the document so people can find it later. And that leads to prepare the documentation. If you do have to have one, make sure you, especially for larger ones, make sure there's a file out there so you can show somebody later. Small ones, a list might be okay, but that's up to you and your management to see how far you want to take that. But again, always good to have documentation for those entries. So you might have it where you might have to submit this to the board for review. I've seen it where let's say you have a larger entry you have to make, and it has to go through a process where you have what it is and the reason for it and the date of it and the amount, and then it does have to go through your board and they approve it. If it is approved, then what happens next is you get to make the entry. Now think back to the Dr. Strange picture, and this is the time where you're going to look like that. you are going to try to find the best way to fix that. And sometimes you had a good idea in the beginning where the entry was going to be there, and once you start to think about it before you hit enter, what's it going to affect? Is it going to fix it what you're going to do, or is it going to cause another problem for you? Just be careful with that entry. And then file it away. Once it is fixed, you feel great about it, file in a nice folder or some way you can keep where people will ask about it. Board members may want to see it again someday, or someone in your community. Your auditor, of course, your nosy auditors, of course, might have to come ask you about it as well. But we're always trying to just see what happened. Is there support for it? Your auditor's always going to look for those things. Why do auditors care? It's not just because, we're bored and we want to find something to look at. They are important. When auditors come to your audit, it's going to be very important that, we're going to look at opening balances, and sometimes adjustments do affect that, and they're going to wonder what happened. So it's always nice to give your auditor a heads up of something have changed, and, did you make a mistake that had to be fixed, or something like that. The more corrective entries you have equals, more audit risk for your auditor. They're going to see, let's say you have like a list of 900 entries or 900 pages of entries that were manual or didn't really have any support for it. That risk is probably going to go through the roof for your auditor. They're going to wonder what happened. Is there something that went wrong with your general ledger? They're just going to probably worry about it. And to relieve your auditor somewhat with that, just make sure you have that folder, some support for it, to be able to show what happened. The auto opinion may have to be modified. With no support for some large entries, we have seen it where the client may not know what happened. Maybe they're new and the previous people did it. Nothing that they did wrong, but they might not be able to help us or your auditor figure out what happened. That might modify the opinion. Your auditor may withdraw from engagement if it looks like stuff is really bad and you have a lot of entries that make no sense to anybody, even including yourself. They might withdraw from engagement, and you wouldn't want that either. So it's always nice to have that support if you can. Your auditors may feel that fraud occurred. I think looking back on some of the ones that we've done, some of the fraud indicators is if you make many corrective entries and no one knows what they were, and it gives the auditor a very bad feeling about what is going on, and it makes the audit very stressful on them as well. Okay, so what could go wrong with corrective entries? If you look in the picture there, I think she's trying to fix something, but because of that, it might cause another problem. And we don't want to do that, and you don't want to do that. So when you're fixing something, just look ahead a little bit, see if it's actually going to fix it. Is there another way you can do it? Maybe there's someone who has done it before in your group that could help you through that. Fixing one thing can cause another problem. That has happened before. We've seen it where we thought it should be one simple fix, but instead it kind of broke something else. So it does happen to people, but just make sure that you can undo something. Take that time stone out, and you can undo it sometimes in your software. Accounting staff didn't understand them. It's possible that when entries were made, maybe somebody didn't really know what it was supposed to do, what it was doing, and that has caused some problems too, because now no one knows what's happening with them. Support wasn't kept for them. Maybe you have a lot of them, but nobody took the time to keep what was supposed to be in there for support. Maybe there was an approval at the board level, but then it wasn't put in the minutes, and then nobody kept a folder, so no one knows. And maybe that person did leave. So you always got to keep in mind that someone new might start, and you want to give them a nice path, to keep following what you did. And I think people would appreciate that. Anyone who is new out there today probably understands that it's not always easy to come into a job like this in the first place, and if there's problems, it makes that job a whole lot harder. And then maybe they weren't approved. Maybe you did all those entries, you did all the right stuff, but then someone forgot to have the board approval. So just make sure if that's part of your policy or your procedures you have, maybe the bigger ones, maybe a list of small ones is fine, but just make sure you understand and the board understands what that is supposed to be. So in conclusion, I just want to, just put some things out there that you can do, and you can learn how to think ahead. Don't feel bad that errors took place. It's okay that it did happen. Mistakes happen all the time. The best thing is though is that someone did find out about it. If there was a mistake made, don't hide it. It's okay, especially when you catch in that first month. Let's say these things did happen, but no one knew about it until 6 or 8 months later, or sometimes years later. It becomes a very big problem when those things don't get resolved, right away. So as soon as it does happen, I would say tell somebody, if it's a coworker, the board, your auditor, make sure that that does happen, so then you can fix that situation. So it does help you for the future. And yeah, other than that, I just want to, get that kind of topic out there, and I can't wait for the next speaker to come up here. So I'm going to give the mic over to Mike Scher, and he will take it from here. So thank you.
Great. Thank you, Heath. Before I get started today, I wanted to give a quick shout out to my wife and my daughter. I I doubt they're listening today. I'm sure they're off doing a Target run or getting coffee together, but we'll have fun without them. So I have a few topics for you guys today to finish out our session. I wanted to go over revenues and expenses and how to properly classify them. This is going to be very important to you if you are preparing those financial statements for your entity. And I also wanted to go over common reclassifications we've identified in our audits, so you know what to look out for so you don't run into them during your audit. I also have 2 sessions on long-term debt and capital assets. And in those sessions, I really just wanted to hone in on some issues we found in our audits and give you some tips and tricks so you don't run into them during your audit. So up first, we have revenues and expenses. You're probably wondering, how does this affect me, or why does this affect me? So it can affect you for a few different reasons, especially if you are preparing those non-audit services and those financial statements. It's really up to you to classify all of your revenues and expenses in the correct categories. If you don't, you could run into a potential audit finding if your auditor identifies a potential adjustment. No one likes audit findings, so if we can prevent those if possible, that's going to be beneficial to everyone. Another issue is, I'm sure a lot of you in here today have to prepare annual budgets. So your budgets usually are broken out by different revenue and expense classifications. So just making sure your budgets are filled out correctly too is going to help you out, and whoever relies on those budgets especially. And then finally, if some incorrect information could be just given out to your various stakeholders, I'm sure a lot of you have boards that rely on your information, you provide them. So you'd be surprised how many people do rely on your financial statements and actually do read your audit report. It's not just a boring piece of literature. There is important stuff in there. So we should probably make sure the amounts in there are as accurate as possible. So we have a few different entities here today. So I really wanted to break out this section based on the different types of entities today. So this first section is really going to be for counties, cities, and the other districts like water districts, park districts. I do have a section on school districts more towards the end, as they're a little more unique, so I wanted to kind of give them their own little section here. So starting with these entities I mentioned, so revenue classifications can range from taxes, charge of services, intergovernmental, miscellaneous, and other financing sources. There can be other revenue sources than those, so don't freak out if your audit has another source. I just wanted to hone in on the main ones here today. And like I mentioned, it's really up to you to ensure all your revenues are coded properly to those revenue classifications, especially if you are preparing those financial statements and preparing your budget. The first section I wanted to go over was taxes. And with taxes, this typically includes property tax collections. So any money you receive for your mill levy, you'll record that on your income statement, that tax collection line. If you have sales tax, there's special assessments collections also. And just a side note for you guys too, make sure you guys are still breaking that out separately in your general ledger. You don't want to lump everything into one line item for just tax. You want to be able to differentiate between sales tax, what was collected for sales tax, property tax, etc. So just a note to make sure you're still breaking it out and not just lumping it into one category or one section, excuse me. The next section is charge for services. And this typically includes services that a government unit charges for their various services. A good example of this is we had a rough winter this past winter. We had a lot of snow. I know I'm bringing up winter in July. I'm sorry, guys, but um, I think in Bismarck, we almost broke a record for snow. So we had a lot of snow to move. So a smaller township or city may not have the resources or the snow equipment to move their snow. So they may rely on a county or a bigger municipality to come down and move snow for them. So when that happens, if let's say a county comes down and moves snow for a township, the county would charge that township for that service, and then the revenue the county receives would then be recorded as a charge of service. So that's just an example of a charge of service. They would include that revenue with all their other revenues for charge of service that they collected for fees on their income statement. Just a side note for you guys too, if you're preparing the government-wide statements and you get to the statement of activities, just a side note that charge of services can include special assessment revenue. If that special assessment is not debt or capital related, it's just for charging for a service for that special assessment. You really should record it in that special assessment as a charge of service. But if that special assessment is debt or capital related, you can, and tied to a project, you should record it as a capital contribution. So just note that if you are preparing your financial statements and you get to that government-wide statement, just keep that in mind. Today, we're really going to hone in on the fund level statements with the income statement, but I just wanted to throw that side note out for you. Next section is the intergovernmental revenues, and this is primarily used for revenues received from other state and government entities. This has been an increased category with increased popularity in the past few years, especially with how much revenue has been passed down by the federal government. A lot of you got COVID revenues passed down. Now we're getting our ARPA funds passed down. So we've seen a lot more activity in this section. And a good example I have is a county auditor received $3 million in ARPA funds. They set up a separate special revenue fund and they recorded this revenue with their other intergovernmental revenues. So that's just kind of an example of what can make up intergovernmental revenues, a good example, as I'm sure a lot of you have had to deal with all those ARPA funds we received. The next section is miscellaneous revenue. This is kind of an other revenue source. It can include donations, other proceeds, and other reimbursements that aren't specific to another category. This is where a lot of our reclassifications do occur, and I'll talk about that in a little bit here. So just note that not everything is considered miscellaneous. What I think the big issue with our clients that I've noticed is they'll just lump something in with miscellaneous if they just don't know where to put it. So if something should be more programmed or classified to a more easier area that is specific to that revenue, just make sure you're coding it there and not just dumping everything into miscellaneous. Miscellaneous isn't a catch-all. Other financing sources. So other financing sources this is also where a lot of the reclassification occurs. It gets reclassed down to. We usually see you can have your transfers in and out in your income statement in here. That's where that gets that revenue and gets recorded down. And usually we'll see proceeds such as bond proceeds, capital asset proceeds that are included down here too. So a good example I have is the city received a large deposit for their bond. They recorded that bond, that deposit of revenue down as another financing source, that issuance. A lot of times we'll maybe see that bond be deposited with miscellaneous, we'll have to reclass it down. But that's just also a common, other financing sources is a common area where we see a lot of reclassifications occur. And I don't know what you guys, what your favorite bond is. My favorite bond is James Bond, better known as 007. For those movie buffs out there, I just couldn't resist how to throw it out for you guys. Some common reclasses now, I kind of touched base on a little bit of them. But if an entity, for example, sells a vehicle or a piece of a capital asset or a piece of equipment, that revenue they receive for that sale should be posted down with other financing sources. On the income statement, there should be a line item for proceeds from sale of capital assets or sale of capital assets. Sometimes we'll see it posted up with miscellaneous because they don't know where to, our oddities don't know where to put it. So we'll have to reclass it down. So that's a common reclass. I mentioned the bond proceeds being lumped into miscellaneous. When you're getting a bond, you'll usually get a large deposit up front because you need to fund a project. So instead of putting it in miscellaneous, move that issuance and those proceeds down to other financing sources, as that's where it really should be recorded. And just other various reimbursements that are in miscellaneous revenue that should be more specific to the other classifications. Just note that. Pivoting over to expenditures, and really depending on the entity will really determine how many different functions you have on your income statement. On the income statement for expenses, the expenses are categorized by what's called function, and they can range from general government, highways and bridges, so your road and highway activity will be categorized in that function, public safety, sheriff expenses, police expenses if you're a city, conservation of natural resources, and debt service. So if you're paying your debt, that's where those expenses should go. And like I mentioned, really depend on your entity will determine how many functions you have. If you're a smaller entity, for example, like a water resource district, you may only have one function on your income statement. So it's not out of the ordinary for them just to have all their expenses categorized as conservation natural resources. If all their expenses really are for that purpose, we can typically see that. Now, if you're a county or a city, you probably should have more functions just because they have more moving parts, there's more going on. If we only saw one function at a county or city, we'd probably question it more on the audit side. So just note that. And then just like the revenues, there are other functions than I listed. I just wanted to touch base on the main ones today. Some common reclass mistakes for expenses. The biggest reclass that we have to do on the expense side is reclassing money down to debt service. And it's not that our clients aren't making their debt payments on time, it's they're just recording that expense in the wrong function. So a lot of times if they have if they have an excavator loan or a piece of equipment that they're paying off and that they're paying out of that highway fund, that expense is all their expenses. They'll sometimes record it all to the income statement where a portion of those expenses are to pay off some debt. If that debt really is to retire that debt, that expense, that should be classified down as a debt service. As the reader will really want to see how much of your expenses are you really paying to service that debt. So you really just want to make sure you're classifying everything properly. I think debt service is the biggest one we've identified. So just note that the reader really should see what's being classified and what your annual debt payments are for each of those funds. And like I mentioned, just like the revenue side, you could have a potential audit finding. No one likes those, so we'll try to limit them if we can. I wanted to give an example of an income statement to put it all together for you guys. So this is one of our report examples from a county. So you see the various revenue sources that I discussed up top, then jumping down to the other financing sources, you can see the transfer activity and also the proceeds from sale of capital asset. They added that line for that. And you can see that they must have sold a big piece of equipment because they have over $700,000 in that line item, where it originally could have been included in miscellaneous up top. And for the general fund, they could have originally had over $1 million in that category. That could have made it a material class. And the auditor could have came in, and if they would have found that, they would have to do a reclassification and move that revenue down to other financing sources. So I'm glad they did it here. On expenses, you can see the various functions I touched base on, and also you can see the debt service section 2, so you can see what they're paying for their annual principal and interest on their debt too, as they properly classified it down. So this is just an income statement. I wanted to show the finished picture for you, and hopefully this helps you out, especially if you are preparing those annual financial statements. Moving on to school districts. So they're very similar to what I just discussed about the other entities. They're a little different. Their classifications are slightly different. So their sources are for revenue are local, state, federal, and other. There can be other revenue sources. I just wanted to touch on these main ones. Local sources are similar to the tax collection section. They're really derived from property tax collections. That's usually what's included in those local sources. Local collections, that's the lion's share of it. Federal and state sources, it's very similar to the intergovernmental revenue section I touched base on, except it's really made up of state and federal. The schools kind of break it out further. If it's a state source or federal source, they'll break that intergovernmental revenue out by that category. And then other sources, very similar to miscellaneous revenue. We'll sometimes see a lot of reclassifications happen in this section also. On the expense side, classifications are slightly different here. They're more by program, not by function. So common classifications of programs are regular instruction, federal programs. So if you have federal expenses, those really should be associated with the federal programs expense line. District-wide administration, transportation. So if you have transportation expenses, anything to do with student transportation, busing, those expenses associated with that should be coded with the transportation function. And really, just like the other school districts, if you're a business manager, if you're a larger school that has an accounting director, and you're preparing those financial statements, it's really up to you to make sure you're coding and classifying everything properly to those functions. And just like the other entities, you could have a potential audit finding if a reclass is needed and it's severe enough. Some common reclasses with the school districts, very similar to the other entities, just like miscellaneous revenue, other sources, not a catch-all for everything. So don't dump everything into other. We'll sometimes see federal grants being recorded in other or state sources or vice versa. So just make sure it's coming from the feds, it should be recorded as a federal source. Just like the other entities, schools can take out debt, and they can also have another financing source to mention also. So they can have debt issuances. So anytime you have debt proceeds, make sure you're moving it down to that other financing source and not recording it with other. That's another common reclass. Then on the expense side, just like I mentioned, schools can take out debt. So it's sometimes we'll have to see them move down the debt payments to a debt service instead of a transportation function if they're paying off a bus, for example. And then really just other program expenses being classified to more specific. So if it is a specific classification, just make sure you're properly recording it in that category. I wanted to give a report example now of a school district. So this is another example of one of our audits of our clients. So you can see the revenue sources up top I touched base on. They can have other financing sources. You see that section below there. Then expenditures, you can see their various programs too. They have a few more than I discussed. Just there can be more than the programs I went over. I just wanted to touch on the main ones. Depending on the school district, there may be more or less. And then you can see they have the debt service area. So they properly broke out their principal and interest payments. And you can see they even set up their own separate debt service fund, which maybe was required by the covenants, which I will touch base on the covenants in the long-term debt section. So stay tuned for that. But I really just wanted to show you guys a report example to put it all together for a school district also. All right, on to capital assets. So with capital assets, I really just wanted to go over some common issues we've identified in our audits and just kind of walk you through those and then also give you some tips and tricks so you don't run into those same issues for your audit. So the first main big issue is we've noticed that our auditees just aren't maintaining their capital asset listings. They're really over-relying on their auditor to maintain that listing. They may send their annual adds and deletes, that's fine, but they're really relying on their auditor to maintain that listing for them. So it really becomes a problem when you switch your auditors and you have to get your listing from your previous auditor when your new auditor needs it. If you can't provide that listing, you could have a potential audit finding. You could even have a potential opinion modification, which you really don't want that. So start maintaining that listing. It is your listing, so you really should be maintaining that. It's your assets, it's your listing. So it's just a good process to start maintaining that. Moving on to another common issue is we've noticed our entities are just missing their capital assets or not even following a policy. So this kind of ties back to not maintaining a listing. If you don't know what's in your listing and you're not maintaining it frequently, you're gonna tend to miss assets. Your auditor's gonna do some sort of unrecorded search, and if they find some assets, they may have to do an adjustment and add it back in, like Heath mentioned, as a corrective entry. So moving on to the policy, most of our policies usually are for capitalizing is anything over 5,000. So really you should be following your policy. If something says to capitalize everything over 5,000, you purchase something for 15,000, for example, and we notice that you didn't add it in the year. If you don't have a good example why it's not included on your capital assets, you're more than likely it's gonna be another adjustment. So just make sure you're following your own internal policies, as those policies are there for a reason to guide you and help you out. Moving on to infrastructure and improvement projects. So we've noticed that clients really aren't tracking their infrastructure projects or improvement projects, especially if they're projects they're capitalizing on. And this is really important for the bigger entities like counties and cities, as they have a lion's share of projects that are going on. So especially if they have a lot of projects in CIP, meaning construction in progress, your auditor will need to see all that support and what makes up those amounts if you're going to keep it as a non-depreciable asset. All these contractors and engineers, I know they're going to want to get paid, so they should be sending you invoices and estimates. So just make sure you're maintaining that support so you know what makes up your amounts in your infrastructure listing. Moving on to bidding. So this was also a common issue that we've identified over the past few years too. We've noticed that some clients just either are kind of trying to evade the bid process, or they're not even bidding out large assets that are required by Century Code. So depending on your entity, there's a lot of codes out there in Century Code that apply to your entity and what you need to use to bid, whether it's a piece of asset or it's a different threshold you need to be using. So just note that if your auditor notices something that needs to be bid, you could have a potential violation of state law. You could have a non-compliance finding, which no one will want that. So just make sure you're reading through Century Code. And by not bidding, you could have potential losses. So if you just take the first number that someone throws at you, you don't explore those bids, you don't advertise it locally, there may have been a vendor down the street that didn't know you were looking for bids, and it would have had the same piece of equipment for thousands of dollars cheaper. So you're potentially out that loss then because you didn't explore bids. So this kind of ties back to just making sure we're being good public stewards and fiscally responsible with taxpayers' money here too. As competitive bids are out there for a reason. We want to make sure we're properly bidding and getting the best price for our taxpayers. Next section is the auditee does not maintain support. So we'll see just missing invoices. If they'll purchase an asset, they'll not have good record documentation. A good tip is just to maintain a folder or a binder of capital assets and just store it away instead of throwing it in a random file cabinet somewhere else. And when it's audit time, you're not trying to hassle and try to find that invoice. So anytime you purchase a vehicle, if you get a title with it, if you get an invoice, just keep that documented. So your auditor is always going to ask for support. So just have that ready. You've noticed that people are missing insurance coverages. So insurance is important, especially if you have loss or let's say a fire happens in a shop. We've seen it happen. If you don't have those assets insured, you're potentially out that loss. So I think NDRF is a good resource for local governments to use. So if you don't have insurance, I would highly recommend getting your assets insured. Some tips and tricks now is with capital assets. So start maintaining that listing. If you don't have it already, like I mentioned, get it from your auditor right now and start maintaining it. And then each year you can then reconcile with your auditor and you can just make sure no one has anything missing on. It's better to have more eyes on a listing and that way nothing gets missed. You don't have to shoulder this all on yourself. You can get someone, hey, get a buddy in your county, a coworker, hey, get an approval process started. If I maintain that listing, can you approve this? Get a good control in place. You don't have to shoulder this by yourself. Get some help. And then, really with maintaining that listing, like I mentioned, it is your listing. You should be maintaining it. You shouldn't be over relying on that auditor. Maintaining support and documentation. Like I mentioned, your auditor will always request support for invoices and projects. I wish we could say we could just take your word for it. We can't do that. We need to see evidence and we need to be able to give our opinions. So like I said, if it's as easy as putting a capital asset binder folder together to help you out, so you're not scavenging through file cabinets to file that missing invoice, whatever it is to help you out is going to be beneficial for you for your capital assets and your support. Last kind of tip with capital assets I want to touch base is just make sure we're following Century Code. This really is regarding bidding. And with that, you just really want to make sure you're consulting with your legal or state's attorney if you have one on staff. Century Code, they can usually interpret Century Code, those lawyers, a little easier than the average Joe. So get there, use your resources. You don't have to shoulder this up by yourself. Get their input, get their interpretation on what you need to be using for bids so you're not in violation of any laws. And then, inquire with your auditor. I tell all of our clients, I'd rather have you ask ahead of time, hey, Mike, does this asset need to be bid? Or, hey, Mike, what code do I need to use? Instead of us coming in during the audit and you just guessing, and then it becoming an issue. So feel free to inquire with your auditor, or you can inquire with us if you need any help. Don't feel like you're doing this alone, you're by yourself. You have resources out there, feel free to use them. Moving on to my last section here is long-term debt. So with long-term debt, just like capital assets, I really just wanted to touch base on some common issues we've identified in our audits and give you some tips and tricks to help improve your audits so you don't run into those same issues. Some common issues I've identified is just the unrecorded debt. So not maintaining a summary or a schedule of outstanding debt, just like capital assets. Make sure you're maintaining that listing, as your auditor's always going to do some kind of unrecorded search. If you're not maintaining that listing, there's a chance that you could be missing debt. So by having those good controls in place, by having someone at your entity help you out, make sure you guys are holding everyone accountable too, so you're not missing any debt, is going to help you out too. And if your auditor does find any debt, you could have a potential audit finding. If it is a big enough omission, no one likes audit findings, so we'll try to minimize those if we can. The next issue is covenants. And this is a common issue we've given out in some of our audit reports too, and what covenants are, they're really just rules that are in debt agreements. Those agreements are usually have some sort of covenant section that lists out the various rules that they want you to follow. It could be a rule of setting up a new fund, setting up a new account, as they want the funds separate from the existing funds. So just make sure you're reading through your covenants and you're not breaking any rules. You could have a potential audit finding if you are violating. You could have a non-compliance finding if you are violating that covenant. So we really just want to make sure everyone is following those rules. They're in there for a reason, so you probably should be reading through them and making sure you're following along. The next issue is tracking debt. So with tracking debt, this will help you make sure you're making your payments on time. Also, if you're preparing the notes, the financial statements, you'll usually need some sort of note disclosure for long-term debt. So just make sure you have all that support, your amortization schedules. If you don't, your auditor will request it, as they'll need to prepare this with the notes. Here's an example of one of our note disclosures for long-term debt. You can see the various types of debt this entity has and their future payments, as this is going to be beneficial to the readers so they can see what your future obligations are for debt. Some tips and tricks with debt: just start maintaining your schedule of outstanding debt, as this will help you out. Like I mentioned, like sometimes I don't even know what I ate for dinner last night. So if you have to maintain your listing a week before your audit and you didn't all year, you're more than likely going to miss stuff. So start maintaining it weekly, monthly, anytime you retire debt. Just make sure yes, good controls in place, and you also have someone, maybe bring someone with you. Hey, can you approve this listing for me every time I modify it? Just adding more controls. You don't have to shoulder this, like I said, all by yourself. Use your resources to help you out. If you pay off a big chunk of your debt that's not following the schedule, usually you'll have to get a new amortization schedule. That schedule will change. So anytime you do that, get updated agreements, schedules if you need it for your auditors, because they'll need that support. Make sure you're reading through your debt covenants, as we want to make sure you ensure compliance. We don't want you to have any issues with not being able to get debt in the future, as that's not going to be good. As if you violated those covenants, someone servicing that debt be like, well, you didn't really follow any of our covenants in the past, so why should we give you any more debt or help you out with that? So just make sure you're reading through those and ensuring compliance, and you don't have to worry about a non-compliance finding. And just like Century Code with capital assets, inquire with your legal counsel or your state's attorney if you have them on staff, as those debt agreements were probably put together by lawyers. They have all that lawyer jargon, so they can usually comprehend that better than the average Joe to help you out. So that's really just a few of my kind of tips for you with debt to help you out. Just to give you a recap on the section here, the first section we talked about revenues and expenses, and hopefully if you prepare those financial statements, this is a good section for you. And if maybe you're going to start preparing the financial statements in the future, so just note that the common reclassifications we went over to help you out, so you don't run into them during your audit. Capital assets, we talked about maintaining that listing is going to be very beneficial to you. Make sure you're following Century Code with capital asset bidding. We want to just make sure you don't run into any of those issues during your audit. And then finally, we talked about long-term debt. Start maintaining that listing, that schedule. Don't want you to have any issues with that. And then also those covenants was a big issue too. So just make sure you're reading through your debt agreements, you're following all your covenants, and you should be good to go for your audit. Close, I had just a picture here I wanted to share, and it says, "Who said auditing is stressful? I am 35 and I feel great." That man looks a little older than 35, so he must be stressing out, but it's honestly not that bad, guys, right? Some days may be better than others, but I guess we can say we're all in it together. So thank you. That concludes my presentation. Stick around. We have some great speakers coming up, and I think we have a question.
Yes, we have a few great questions here for you, Mike. So first, when you were talking about the income statements, a question came in: is a buyback considered debt service?
A buyback, so as like a trade-in, or?
Maybe we can have that viewer clarify the question just a little bit, and we'll answer this other question underneath here. So Can you give some of the NDCC sections that would require those local governments to go to a bid process?
Yeah, we definitely could provide that. On top of my head, I don't know the exact codes in my head, but we definitely could get that information out, as it really depends on your entity. Schools have different codes, counties, cities have different codes. So there's all sorts of codes out there. So we'll definitely can provide that information.
Absolutely. Okay, so we'll save that question as well and have someone reach out to you. Great question. And the final question for this section for you, Mike. Do local governments need to use a bidding process for vehicles and equipment if they go through the state procurement office?
Usually if you use the state OMB, I assume they're using the state OMB process. I think that's applicable based on century code, I believe. So they can use that process. You just want to make sure that sometimes in those, depending on the entity, like I said, so sometimes in counties, they'll require you to, if you're not using OMB, to also bid locally in the newspaper for so many days. So just make sure you're not missing out on anything like that too. But it really depends on your entity too, on what you need to follow also on century code. But we've seen the state bid be used a lot for our clients, so that's been allowable. Yep.
Absolutely. We've got some great questions. Thank you, Mike, for your time. And any other questions about this section we can answer today in our Q&A panel. We'll be back soon with the next session.
All right. Thank you.